we are going to see chapter number 2, that is depreciation account of standard 11 commerce subject account. So today we are going to see one more example of reducing balance method, where we are going to pass the journal entry as well as we are going to prepare the depreciation account, machine account, as well as we are going to see the accounting effect in the final account. So this example is the relate to reducing balance method, and this is the fifth part of the chapter number 2, and 1 to 4th part is linked in the description. Harpal Limited has purchased a machine of rupees 1,50,000 on 1/4/12. Installation expense to it was 10,000. If every year 15% depreciation is chargeable under reducing balance method, pass the journal entry and prepare machine account, depreciation account for first 3 years and disclose accounting effect in final account of first 2 years. So here we have to find out the depreciation, and for that we have to make the working note. So let's do that. Illustration number 3, working note. So here we can see that we have to find out the cost price. So cost price of machine is equal to purchase price plus installation expense. So that will be 1,50,000 plus 10,000. So cost price of the machine will be 1,60,000. Now we have to calculate the depreciation, and the depreciation is on the machine was purchased on 1/4/12, and first year depreciation we are going to calculate on 31st/3/13 depreciation that we are going to deduct. So first depreciation we will calculate on 31st/3/13, and the depreciation amount will be on 1,60,000 at the rate of 15%, and the amount of depreciation will be 24,000. So after the depreciation, the balance of the machine account will be 1,36,000. So this will be the book value as on 1/4/13. So this is the book value as on 1/4/13. Now let's calculate the depreciation for the second year. That will be 31st/3/14 depreciation, and that will we are going to count on 1,36,000 at the rate of 15%, and that depreciation amount will be 20,400. So let's deduct that amount. So here, after deducting that amount, the book value of the machine will be 1,15,600. Here, book value as 1/4/14. So this will be the book value as on 1/4/14. Now let's calculate depreciation for the third year. That will be 31st/3/15 depreciation. So here we are going to calculate depreciation on 1,15,600 at the rate of 15%, and the amount of depreciation will be 17,340. So here, after that, the book value of the machine will be 98,260. So this will be the book value as on 1/4/15. So this was the last balance of our machine account in the books. So students, you may note down this, then we are going to pass the journal entry as well as we are going to prepare machine account and depreciation account and accounting effect for the final account. Let's see illustration number 3. Harpal Limited has purchased a machine of rupees 1,50,000 on 1/4/12. Installation expense to it was 10,000. If every year 15% depreciation is chargeable under reducing balance method, pass the journal entry and prepare machine account, depreciation account for first 3 years and disclose accounting effect of it in final account of first 2 years. So here we have to pass the journal entry very first, then we have to prepare machine account as well as depreciation account and final account of first 2 years. So let's pass journal entry. So here we have purchased the machine of 1,50,000 and installation charge is a 10,000. So for that machine is coming in the business machine account debit to bank account to cash account. That journal entry is supposed to be passed on 1/4/12. So that will be machine account debit to bank account to cash account, and that will be 1,50,000 and 10,000. So that will be total of that will be 1,60,000. That will be the amount of the machine. Being machine purchase of rupees 1,50,000 and installation charge paid rupees 10,000. What that? Now let's pass the journal entry at the time of end of the first year for the depreciation, and the journal entry will be depreciation account debit to machine, and the rate of the depreciation is 15%. So 1,60,000 15% of that. So let's pass that meeting at the end of first year 31st 3/30, and that will be depreciation account debit to machine account, and 1,60,000 into 15, and that will be 24,000. B. Depreciation charge on machine for first year. Now we have to close the depreciation account and transfer to profit and loss account on the same day, and the journal entry will be profit and loss account debit to depreciation account 31st 3/30, profit and loss account debit to depreciation account, and that will be 24,000. Here B. Depreciation account close and transfer to profit and loss account or yes. So this was the end of the first year. Now we have to pass the journal entry at the end of the second year, and for that we have to deduct the cost price of the machine that we already done in the working note according to that. Let's see that. So here 31st 3/14, and here depreciation account debit to machine account, and here the amount will be 20,400 according to working 20,400. Being depreciation is charged. Depreciation charge on machine for second year. Now we have to close the depreciation account and take to the profit and loss account. For that, on the same day, 31st 3/14, profit and loss account debit to depreciation account. And the amount will be the same, 20,400. Being depreciation account close. And transfer to profit and loss account for that. Now we have to pass the same journal entry for the third year, and third year is ending on 31st 3/15, and the journal entry will be depreciation account debit to machine account, and here amount will be 17,340. 17,340. So here being depreciation is charged for third year. Now let's close the depreciation account and transfer to profit and loss account. For that, profit and loss account debit to depreciation account, and the amount will be 17,348. Here being depreciation account close and transfer to profit and loss account. And loss account. So this is how we have to pass the journal entry. Let's make the total of this. That will be 2,83,480. 2,83,480 total. So students, you may note down this, then we will see depreciation account as well as machine account. Prepare machine account as well as depreciation account, and let's make the effect in the final account. So here we have already passed the journal entry. From that we are going to prepare the machine account. So first journal entry was machine account debit to bank to cash. So on the debit side of machine account we write on 1/4/12 to bank account to cash account. Amount will be 1,50,000 and 10,000. Then the second journal entry was depreciation account debit to machine account. So on the debit side of depreciation account, at the end of the year 31st 3/13 to machine account, and the amount of depreciation was 24,000. And here on the credit side of machine account 31st 3/30, and the by side of profit and loss account. 31st 3/13. At the end of the 31st 3/13, on the debit side of profit and loss account, we'll write to machine depreciation. And here amount will be 24,000. And on the credit side of depreciation account, we will write 31st 3/13 by profit and loss account. And the amount will be 24,000. So this was the entry supposed to be posted at the end of first year. Now we have to close the machine account as well as depreciation account. For the closing, here as we know, the amount will be 1,60,000. That we will take to the credit side, 1,60,000. From that, we are going to deduct 24,000. So the balance of the machine account will be 1,36,000. Here on the same date, that will be 31st 3/13 by balance carried down, and the same balance we are going to brought down on the next day, that is 1/4/13 to balance brought down, and the amount will be 1,36,000. And here we are going to close the depreciation account. This will be 24,000. And in the balance it will show the machine account opening balance was 1,60,000, and after depreciation amount will be 1,36,000. So that we will show in the balance sheet. Machine was of 1,60,000, and depreciation we are going to deduct. That will be 24,000. So closing balance of machine account will be 1,36,000. So that was the entry for the first year. Now let's see entry for the second year. And second year, first journal entry will be depreciation account, debit to machine account. So here on the debit side of depreciation account, 31st 3/14 to machine account, and the amount will be 20,400. Same, we are going to crediting on the machine account 31st 3/14 by depreciation account, and the amount will be 20,400. And now the second journal entry for the second year will be profit and loss account, debit to depreciation account. So here 31st 3/14 on the debit side of profit and loss account, we will write to machine depreciation, and the amount will be 20,400. And the same we are going to crediting to the depreciation account 31st 3/14 by profit and loss account, and the amount will be 20,400. So this was the entry. Now we have to close all the accounts. So here the total amount will be 1,36,000. Then we have to take the same on the credit side, 1,36,000, and here we'll show the balance of the machine account, and will be 1,15,400, 1,50,600, 31st 3/40 by balance carry down. The same amount we are going to carry forward for the next year, 1,440, and the amount by balance brought down, and the amount will be 1,50,600. So that is, and now we have to close the depreciation account, and it will be 20,400. 20,400. Now let's show the same in a balance sheet. So machine, and the opening balance of the machine account was 1,36,000, and after depreciation amount was 20,400, and after that the amount will be 1,15,600. So this was the accounting effect in first 2 years. Now let's post for the third year. So third year journal entry is depreciation account debit to machine account. So on the debit side of depreciation, 31st 350 to machine account, and the amount of depreciation is 17,340. And on the credit side of machine account, we write 31st 350 by depreciation account, and the amount will be 17,340. And now let's see the second journal entry, that will be profit and loss account debit to depreciation. But here we don't have to prepare the profit and loss account, so we are going to write only in the depreciation account. So that will be 31st 350 by profit and loss account, and the amount will be 17,340. Now let's close the machine account. So here we take total of 1,15,600. 1,15,600. If we are going to deduct from 1,15,600 17,340, amount will be 98,260. So here 31st 350 by balance debit down. So this is how we are supposed to prepare the machine account. Now let's close the depreciation account. So here 17,340 and 17,340. So this account is also closed. So students, you have to make the entry according to this. Students, you may note down this in your notebook. Thank you for watching this video.